Hey, and welcome to Tax Talk with the Tax Queen. My name is Heather Ryan. I am also known as the Tax Queen. In this video, I'm going to cover the 5 important things to know about the 1099-K. If you haven't paid attention, or maybe you have and you heard about this and that's why you came here because you're like, what is this? I'm worried about this 1099-K and tax reporting. So there are some changes to this starting in 2022. First of all, what is the 1099-K? The 1099-K is a form that reports third-party network transactions or payment cards. This would be like a Stripe, a Square, a Venmo, a PayPal. If you use QuickBooks payments or Wave payments or things, and that's how you send your invoices and receive payments, that's your third-party network, right? So they are processing your payments for you and then sharing that money into your bank account. So if you receive $600 or more of this payments via this method, you're going to receive a 1099-K. The 1099-K is going to just show you your gross revenue received from that third party. And it's going to be issued to either you under your personal name and your social security number if you are a sole proprietor, or it can be your business name and your EIN if that's how you shared your tax information with that third party payment processor. Some people are kind of confused, like what's the 1099-K versus the 1099-NEC. So we just went over what a 1099-K is. The 1099-NEC stands for non-employee compensation, and this is a form that you would be issued from the employee or company that you're working for. If you're a contract worker and you're doing contract work for companies, they issue you a 1099-NEC, and this is only if you received or were paid by cash, check, ACH, so electronically, right, direct deposits, and no third-party payment processors. So if they pay you via credit card, they shouldn't be issuing you a 1099 NEC. Or if you are the business owner and you have contractors, you do not need to issue a 1099 NEC if you are paying your contract workers via credit card or PayPal, because PayPal is going to report that income. So just be really careful with that. If you do happen to receive both, don't worry about it because as long as you're reporting your income correctly and it is greater than the amounts that are showing on those 1099 NECs, then you shouldn't have a problem. So this, as I was saying, the rules changed in 2022. So the American Rescue Plan Act of 2021 set this in motion. It used to be if you received $20,000 or more and you had 200 separate transactions. So that meant you had 200 payments happening throughout the year, and that those 200 payments were greater than 20,000. That's the only time you would receive a 1099-K. Those numbers were lowered, and it is now down to 600. So it went from 20,000 to 600, and there is no limit or amount of transactions, right? It can be one transaction that was $650. You're going to get a 1099-K. So just be aware of that. And it's nothing scary. It's not super, worrisome. It's fine. If you've been keeping track of your books and your numbers and your income, it should be greater than the number that's reported on this form anyway, or forms if you have multiple payment processors. The only thing I will want to make sure and point out to my small business owners is that you must have a Venmo or PayPal or any of these other companies you're working with. Make sure you have a business account, and that's who they're going to issue you. So if you're using your business account for personal payments, like your friends, you went out to dinner and your friends owe you $50 for dinner, use your personal account for Venmo and not your business. Make sure you're keeping things separate. And I stress that all the time. Make sure your finances are separate. Business, personal finances, they need to be separate. And this is no different. So don't commingle personal payments into your Venmo, because it could be, you're also, if you're using a personal account with Venmo or PayPal, that's against their rules. If they catch you, they can close your account down. So just be really aware, making sure to keep those things separate. So the one important thing I really like to point out is to make sure that my small business owners, when you're doing your books, are actually accounting for the expense of taking the processing, right? So taking those payments through PayPal has a cost to it. And it's usually like 2.9% or something, Stripe, Square, they all have these percentage that they take. So just make sure that you're reporting your gross revenue. So make sure you're adding that in to get your gross revenue. So let's just look at it as like you get a $2,000 invoice, right? You submit that to your client. Your client pays you the $2,000, but you only see 1,090 of it hitting your bank account because those extra $10 went to the fees for PayPal or Stripe or Square or whatever other processor you're using. So make sure you're putting that $10 in. And at the end of the month, you can just add that in like a one-time transaction if you wanted onto your books to make sure that your income is equaling the number that's shown on the 1099K. And that's the only way you're going to get there, is if you're actually adding those transaction fees into your gross revenue. But on the flip side, don't forget to make sure that you're taking it as expense. So your bottom line is going to be the same, but your revenue is going to match what's on the 1099K. And that's really important to match. So that is really the impact that it has on you, and make sure that you're tracking and matching what's reported on there, tracking the full revenue received, their full gross income, and you're taking that expense of the payment processing. That's really important, and I think a lot of small business owners miss that. So just be aware of that. So then how do you actually use this 1099K to report it on your tax return? Again, if your books are clean and you're accurate and you've been keeping them up throughout the year, your number is going to either match the 1099K number, or it's going to be greater if you accept cash or check, or other forms of payment. So that's really, simple, easy. You're all good. IRS is not going to bother you. It's not going to audit you. It's not going to question, because you're reporting a number that's equal to or higher than what's showing on this form. No questions asked. You do not need to submit the 1099K form with your tax return. It's automatically, the payment processor is going to send that to the IRS or the state, whatever government authority is required. So hopefully you're not freaking out about the 1099K rules, and this is giving you a little bit of a better understanding. Let's just kind of go through the 5 things that I just talked about. So we talked about what is the 1099K, and it is the third-party payment processing form that's going to show your gross revenue. And remember, it's different than the 1099 NEC for non-employment compensation. And these rules changed in 2022. So if it's $600 or more that you receive through payment processor, you're going to receive one of these forms. And just one other thing, remember to record your gross income. So record those fees as income, right? That's your full income. So if you invoiced for $2,000, make sure you're recording the $2,000, and then you're recording the expense of the payment processor fee. Really important. And then, if your numbers match, then you don't have to worry about it. You don't have to submit that 1099K with your tax return. If your numbers match or is greater, no questions, no problems. You're in the clear. Hope this helped you today, and I'll see you next time.